Jim Walker's Managing Director and Founder of Asianomics, who joins us live from Hong Kong. Jim, good morning. Thank you for joining us. Jim, do you think tonight's Fed event is going to be more like a no event? Because US Fed has a reputation of not shocking the system, and they pretty much could taper, but they could taper light on expected notes.
I think that's exactly right. There's no surprise coming if they announce a cutback in the asset purchase program. And usually the way of it with Ben Bernanke has been, as he said, there will be no surprises from a Fed under his chairmanship. And that's tended to be the case so far. So I think the only thing that would surprise the markets tonight is if there was no announcement about tapering.
Jim, hi, morning. Do you think Bernanke is going to announce a constructive timeline of quantitative easing, though?
No, I don't think so at all. And I think what they'll do is they'll announce that they're cutting back the program very lightly so far in the announcement today, this evening. It'll probably cut it back by $10 billion. That seems to be the consensus just now, from $85 billion a month to $75 billion a month. And they'll basically say it, and then we'll wait and see if that has any effect on the economy, or whether the economy is strengthening and allows us to taper further, etc., etc. I think it will be a very modest announcement, and then a wait-and-see approach.
Jim, U.S. economy, or the economic data which has come from U.S. economy is mixed. On one side, the U.S. mortgage market or the housing market has stabilized, but on the other side, the non-farm payroll data was not that impressive. So what do you think will influence the script of tonight's Fed commentary? The U.S. job market, which was the painful point, or the non-farm payroll data?
Yeah, it's a hard one to read. The US data is mixed. That's the bottom line. Now, some people might put part of that mix down to the sequestration that took place in March, but in actual fact, the economy in the second quarter accelerated relative to the first quarter, so it'd be difficult to blame the sequestration process for any mixed news on the economic front. But the labour market is kind of okay, but there's an awful lot more part-time jobs than full-time jobs being created. And at the same time, if you go to small businesses, they're more confident than they were a year ago, but they're much less confident than they were at any time over the previous 20 years before the crisis. So, I mean, this is a pretty soft economy, which is doing good in parts, okay in other parts, and pretty flat in the rest of the economy. So it's not something that the Federal Reserve is going to move fast on, that's for sure. And I think we should just expect a very, very slow progress in trying to remove this extraordinary monetary easing from the system.
Jim, what happens to the dollar then from here on? Because the dollar index has been trading close to 4 to 5 week lows, helping emerging currencies like ours. Do you see the dollar gaining ground post-Fed comments? Or do you think it's now all priced in and it's going to be status quo?
I mean, I think a lot of this has to be priced into the market. Everybody's been anticipating this event since May, when Bernanke first started talking about it. So there really should be no reaction at all in, for example, emerging markets to any announcement of a reduction in the asset purchasing program. As far as the dollar itself is concerned, they're still going to be printing, or not printing, but buying around about $75 billion worth of assets a month. That's more than anybody else on the planet. The dollar shouldn't be strengthening under these circumstances.
Jim, what happens if the reverse script plays out, which is Fed decides to taper more and the tone of the commentary is not dovish, it is slightly hawkish? What happens to emerging markets then?
Well, that's going to be an interesting one, because there's a couple of things that we need to remember about emerging markets and what has happened over the last few years. Everybody makes this assumption that QE has been great for emerging markets. But bear in mind that the emerging market equity index has underperformed other equity indices for 2.5 years, more than 2.5 years. So in actual fact, there really hasn't been a tremendous positive relationship between QE and emerging markets. Secondly, we've had a huge amount of turmoil in emerging markets since May, when prospects of QE tapering were announced, even though there has been no tapering. So in other words, market price expectations have already adjusted. I would say if there was a much more hawkish stance and the Fed was going out and saying, look, the economy is recovering, we're about to move much more quickly away from QE, emerging markets would go up. And the reason they would go up is that we would get away from all of this nonsense that is all about easy money and then start focusing on who are the beneficiaries of an improving world economy. Well, it's the exporting countries, and most of the exporting countries are emerging markets. So I think it would be great news for emerging markets if there was a much quicker reduction in QE and a much more focused statement saying the global economy is recovering. I'm not quite sure that would be justified, but if it were forthcoming, then I would be a big buyer of emerging markets, especially if they were dipping on the announcement and then rising on the realisation that this was good for them.
Jim, last when we interacted on August 20th, you were of the view that the rupee doesn't have too much more downside, and that's exactly played out because we made that low of 68.80 thereabouts, and we've bounced back from there, as has been the case actually with the equity markets as well. But immediately after the Fed meet, you've also got our own central bank meeting. It'll be Raghuram Rajan's first policy address. What's expected, and in light of that, how do you think equities and currencies to pan out?
Yeah, unfortunately, I don't think there's anything that RBI is going to be able to do on Friday at all. I suspect that the monetary policy will be left very much on hold, purely because there will be an announcement from the Fed. The markets might be still slightly reacting to it, but the thing is that they won't have had enough time before Friday to show a trend reaction to what's going on in global monetary conditions. So I think the RBI is going to be forced just to leave absolutely everything on hold.